Record. This is Short Hammer. It is the 20th of August, 2022, and this is Trading Zones. Last week was fascinating, but not surprising. What did we say in our last video? The people that were spreading this rumor that were saying that the Fed was going to reduce rate hikes because there was a smidgen downtick in inflation, but inflation is still over 8%, were insane. There's no way that they're going to stop because there's a smidgen downtick that could be attributed to a slight dip in the price of oil or something like that. It could be any sector where there was a slight pullback in that particular sector as far as the pricing that could impact the inflation number for that particular reading could be impacted a smidgen, right? So they have a plan and they have a goal, and they're not going to stop raising rates till it gets there. And the chances are it's going to end up in a recession. And I know a lot of people are looking at the recession like, oh my gosh, this is horrible. But just the way that economic cycles work, every X amount of years, whether that's 6 or 7, there is supposed to be a slight correction. It doesn't have to be, market crashing, but because of the way our economy works and the way that our the Fed works, right? The central bank works, the manipulation of currency, the manipulation of rates to to stimulate the markets is unnatural. And the market has been running hot for well over a decade, right? And so I think that the depth of the correction should be comparable to the depth of the manipulation. And so far, we've been manipulating, or companies have been, there's been a lot of manipulation in the market, and things should, go back to where you can look at a company's profits, their losses, look at their balance sheet, and that should be used to be able to value a company. That's really what we should get back to. A house shouldn't be able to jump up 20 or 30% in value in a few years. That's uncommon. So there's a lot of things that have happened over the last few years that have been uncommon. Many of us have benefited from those things, right? But the price of that is there will be a correction, which means there's going to be interest rate hikes. There's going to be a balancing. That's just how it works. So I don't think it's an administration to blame. I don't think people can blame Trump. I don't think people can blame Biden. I don't think people can blame whatever administration. We as a whole have decided how we would like things to run in this country by the people that we elect and the systems that we have in place. That's what we chose. And for many of us, it's been windfall profits for the last decade, right? But at some point that bill becomes due. And right now there's a slight reckoning. It's not a big deal if you've been profiting the last decade from a hot market. So this little bit of turbulence, and it's only been, this year's worth of turbulence after a decade of running hot. I think we're going to be okay. So off the soapbox, let's look at these charts. First up, looking at RTY. So where we are right now, nice pullback. I'm looking at the 4-hour chart because sometimes for me, the 4-hour chart gives me a little bit more, or gives more texture to the market than a daily chart. And so I see here on the 25th of April and on the 5th of May, these little reversals. And we're pulling back, and the price point, the top one here is right around 1955. And this other one here is right around 1950. And where do we drop? Right around 1953-ish. We're in the 1950s. And look here, on the 8th of August, we saw this little reversal pullback here. It's not really a strong one, but that's interesting too. So we're tapping this point. So what do we expect to see? Well, either there is going to be, how to say that demand becomes supply, supply becomes demand. We'll see. If the buyers are here to buy this back up, we should see a back test back into the 1970s. That would be technically sound. And you can see little pullbacks on the 11th, and here a little flare down on the 17th. Then all these wicks, the 18th here, we should see something into the 70s. Here we see the hitch. This is the pop gray. So we'll see if there's enough juice, right, in financials to give us a pullback into the 1970s. And then if the buyers decide to step in and push us higher, we'll see. What we have to remember is this week is Jackson Hole. The Fed is going to be talking, and I'm pretty sure they're going to be very, I'll say, hawkish on their discussions around inflation and rate hikes and trying to control that. So this could be us heading into more turbulence. What the Fed says is going to have a dramatic impact on the market, right? So be careful this week with your positions and what you're doing, and if you're trying to, put on longer term positions after that conference or meeting, we should be able to get a direction heading into the fall to be able to see if we're going to see a sharp pullback. And also maybe there's a lot of institutional money that wasn't in this last run, right? Maybe they want to get involved. They want this market to go back down. They want to buy back in and, push it back through the top for the end of the year. We have to see. There's so many variables here that we have to consider. I would recommend not being in too heavy. Quite a few of the people that I know that were sort of taking it in the shorts most of this year because they were heavy in the early part of the year, the Januaries and Februaries. They were thinking that the market was going to continue to push. They averaged heavy on the dip, and on this push back up, they've been scaling out, right? And sort of made back a lot of their losses. So what we want to see this week is, was this last rally real? If this rally was real and the bulls are back in control, we're going to pop back through the top here, right? If that rally was not real and it was based on the rumors and hearsay of the Fed going to sort of ease rate hikes because that was part of the rally, then we're going to we're going back down. Where we're going to go, how far we're going to drop, I don't know. I can't predict that, but that's what we're going to watch for. Financials did take a hit on Friday. Sort of almost every sector took a hit on Friday. And I think that we just have to be cognizant that as much as we would all like the market to be consistently going up and we just are able to buy every pullback, we're not in that type of a market right now. You just got to be careful and get your wins where you can. So those levels that I mentioned, if we lose the 1950s, 1940s are here. Next up is 1920s, 1925-ish area. Then below that, 1910s. If we lose that, then look for the 1890s, right? All this is possible depending on what happens at Jackson Hole. So just got to keep, it seems as if I'm giving a wide range here, but I'm just giving a logical range as what we could expect based on what may come out of that of that situation. So looking at the MES, it has a similar chart, right? Except that a lot of the support for the MES, I'll look at down here, right around the 4150s, right? And us pulling back to the 4160s would not be weird, honestly. But I see a lot of these reversals. We have 4203s an area. This right here, the high is 4180s. But me personally, I kind of like these 4150s. That looks like an area where if we fall into this, which is the top of this zone that we drew here, right? The 4150s by the 4070s, that will be a good area. Looking at this, the structure here to the left from May into June, and looking at the structure here in August or earlier August, right? A pullback to there wouldn't be uncommon. Pull back to 4203, right? Look here, we pull back on the 11th of August. It looked like the 11th, I think the 11th, and we bid back up. So a pullback to here, that's technically sound to me, right? And it sort of ties in with this high from the 30th of May and a little bit of this structure here from April. into early May. So that's interesting on the MES. So that's one thing that's possible. The other thing that's possible is we could buy back up. So remember, we see this slight flare down here on what's this, from the 15th of August. But what I'm going to be looking for here for me personally on the MES, if you remember Thursday, we were struggling to get down through the those I think it was the 4260s, like 4265. So 4260s held. So for me, what I'll be watching for is if we go back to those 4260s, do we crest that area? And if we find acceptance in the 4260s, do we then get back into the 4270s and begin to climb? And that to me would be interesting, right? Because that was sort of like a floor almost on Thursday, and that floor broke overnight and back tested Friday morning, and then we dipped lower. So sort of it's like a game of it's like the game of zones, right? So these zones. So for me, if we go lower, I'm going to be watching the 4200s, right? And if we lose the 4200s, then we'll see if we can get down into these 4160s by 4150s. That will be interesting to me, and so I'll be watching for that. If we don't have buyers stepping in to hold the 4200s, and if we don't regain the 4260s, then I believe we're going to see negative drift down to the lower 4200s and maybe even into the 4160s, 4150s. And then we see these levels as we go down the 4110s, 4074. So then we're back in this zone. If we lose that, then I feel like we're slightly back bearish. So there's a lot of little hitches in here that we can see. My preference, I'm neither a bear nor a bull. I just want range, right? And so, in my opinion, the greater range right now is if we see a little bit of volatility in a sell down here, and then people get kind of, I think, fearful, and either we see a sharp drop or there's a buy back up to try to regain those 4260s. That's what I'm watching. We'll see how that plays out. On to the MNQ. So same setup, right? We drop down here into the 13,240s. And so what we were watching, where is it? 13,570s. We're watching this area on Thursday, and that was what we were fading. And he pushed into the 3570s, looking to get short. And what's funny is if you open this up a little bit, drag this down, open this up, it's a little zone here, 13,560s by 13,580, right? 13,562 by 13,580. We see the rejection here, and we rejected here, right? And then we saw the drop. Now we are sort of stopping around the 13,240s by 13,260s. We'll see how that plays out. But if we lose this area, the next area to look for is 13,118s by 13,089. That's what I'll be watching for. If we lose that area, we do have a hitch here at 12,970s. But if we lose that, then we're looking at 12,820s. If I were bullish, what I would want to see is a buyback over the 13,420s, first of all, right? And once we regain that, we need to get through the 13,570s, which is the top of that area. But just getting back into the 13,420s and getting back into the 13,430s would be my first step. That's what I would be looking for. And so we'll see what we look like next week. But usually when interest rates go up or there's fear of continued interest rate hikes, that's bad for tech, because tech companies are growth. Most tech companies are growth companies, right? And a lot of those companies may not have a lot of cash on hand. Apple has a lot of cash on hand, but every company doesn't. And a lot of companies do need to refinance their debt. So any company that is not necessarily heavy in cash, right? Like a Netflix that may not be heavy in cash. We'll get to that. If you have debt that you have to refinance and service, that could be a headwind for your company. It's costing you more to manage and finance this debt, especially if also you're using debt to for R&D, right? It's just there's so many things that companies use debt for that they borrow money for, you could say, that when interest rates are high, it's tough for a lot of companies. So that's one of the things that we can see where the tech sector may not, may not be too happy with this interest rate hikes. So it's one of the things to keep an eye on. Keep it moving. Headed over to Amazon. And we are about to pick up the pace. So looking at Amazon, watching for a pullback into the 136 area, right? That's where we have our line. If we lose that, then we do have a hitch here around 133.80s. I'm not going to draw a line right now, but that's an area to watch for, these 133s. If we lose that, then the potential is down here around the 124s and potentially lower, right? If I'm in Amazon, I would prefer that we catch a bid here in the 136s, 136 to 133 area that buys us back up into the 140s. That's where I'd want to be. That's where I'd feel comfortable in this area here. I'd feel a little bit funny if we don't hold the 136s here. We see the pullback back on the 27th of April. We can go back here and look at March. No, that's pre-split, but just some areas to watch. We'll see how that works out with Amazon. I think Amazon just acquired is it IRBT, and that's going to be an interesting partnership. Just doing more things. This is in a previous video. I'm not going to get into it. Just the power, harnessing and leveraging the power of Alexa. It's a great thing. Very intelligent. Let's keep it moving. Not going to spend too much time in any one area. Netflix, we mentioned, if you want to get into the whole their new advertising bend and how the loss of eyeballs, or that eyeballs being flat or growth being flat as far as new subscriptions and new members, it's not important for them. Monetize what you have. That's how you make your money. They have a ton of people that are loyal to them, and if they lose 1 million or 2 million subscribers, I think it's irrelevant. The main thing is find ways to be able to monetize the loyal subscribers that you do have that aren't going anywhere. And they haven't necessarily done the best job of that, but what they're working on with their advertising lean now, I think has a huge potential if it's going to play out the way that my mind thinks it's going to play out, or the way that I think they explain that it's going to play out. I think this is huge for them. In a previous video, probably last week's video or the video before that, I'm not going to get into it this video, but watching these levels, we're in the gap, right? From earnings, that earnings drop, and it would be great to see a buyback into the 260s, first of all, but we may not get there immediately. So the next area I'll be watching is a fall into the 220s. That would be interesting. We see these tops here at 230, 50, 230s. If we fall below that, watch the 220.83. Then below that, watch the next hitch at the 212s. And then we have a line down here around 204. That's what we're watching. So we'll see how that plays out on Monday. The preferable thing would be to get back above that 245 area and start to bid this back up. That's what we'd like to see. I think the best thing that we could see early next week is sort of the market buying back up aggressively prior to Jackson Hole, right? Because at least then a lot of people that sort of got caught in that dip would be able to sort of scale out of things on that buyback up in preparation for what's going to happen later in the week. Me, I would be, if I was in heavy, I would be running. So chips, look how sharp chips fell, right? And we know that we talked about NVIDIA being above the 181-ish area, and above that we're bidding, and below that we're selling. Well, now we're headed into earnings and we're dipping strongly or aggressively. The next stop here looks like we may be looking at the 168-ish area. But with earnings on the 24th, may want to be careful. The 23rd, 24th, but just may want to be careful. I will probably be avoiding NVIDIA this week unless I see a clear level to level play. But chips, what's funny is if you look at the market on, I believe it was Thursday. Was it Thursday? I think it was Thursday. Was it Thursday or was it Friday? It was Thursday. Chips had a bid, and it really was I believe it was either Thursday or Friday. Chips really had a bid under it that was really pushing the market up, and it was really interesting. And that changed on Friday. So what I'll be watching, if you're trading NVIDIA, I would try to avoid it this week because it's earnings week. And we'll see how it responds to earnings and what those numbers are. But that's next level 168s. Then we'll be watching for the 150s. But I think earnings will give us either a break back up and an explosion through range or a retrace and a drop down here into the 150s and maybe lower. But it depends on where we are by the time earnings is announced and if the market is kind of heavy this upcoming week. So we have to wait to see how that plays out. Microsoft came off a little bit. 284 by 283 is next area that we're watching. If we lose that area, next area up is the 278 and 276 area. Then below that, the 271s. If we regain these 286s, then we can keep our eye open for the 288.50s and into the 289s. But strong run off from Microsoft after earnings, right? It's beautiful. Definitely beautiful. But a lot of these companies are laying off some of their workers and sort of, I would say, sort of pivoting a little bit, expecting there to be a downturn headed into 2023. And if we remember, Elon mentioned this, I think last month or the month before, that even Tesla was doing this also, sort of finding ways to operate in a lean in a lean way, because there is an expectation that there's going to be a recession of some sort, right? And what that's going to look like, I think no one's quite sure. Just because of how interconnected the world is these days on a global scale, supply chains and such. So I think it's just really interesting where you see these huge companies that are saying, hey, rough times ahead. We're going to batten down the hatches, lighten the load, toss some barrels overseas, not meaning to call any employees barrels, but they're just trying to toss some of the weight overboard. And we saw this happen back in 2008 when a lot of I'll say high level senior tech people lost their jobs, right? And we'll see how that plays out this time. But you can just look back at some of those stories. When a company perceives turbulence, they do try to lighten the load, and they try to, lighten what they're paying out for employees, right? So we'll see. Lighten the operating costs, but watch those levels I just mentioned on Microsoft. Let's keep it moving. Microsoft. Then we want to. It's actually a few different things that I want to look at, but we'll get there. We will get there. Apple, nice pullback here. Rejection there. So watch the 170.07. I'm not gonna watch that. We'll see how this plays out around the 160s. If we get back to 167 with the buyers that have been trying to pull this back up. I think that was a tough blow for Apple, this pullback. Apple was one of the main drivers, I think, this past week. It was just really strong. Let's see if we get any buying here around the 170s, and if we dip into the 160s, like I expect, around this pop gray area, 169, see if there's any reaction there, or if we dip lower here into the 167-ish area. But honestly, I am not, and this was so funny. I didn't even draw this before. I don't really jump into Apple much. Let's see if we drew a trend line. Let's see. And I draw my trend lines weird at times, right? Just weird at my trend line drawings. If you drew a trend line, that's tight, but yeah, that's how I draw it. That's interesting. Potentially, right? The low here, higher low, higher high, higher low, higher high, higher than this high, higher low technically, so sort of went flat here, higher low, made a higher high, higher low, higher high, higher high, higher low, higher high, sideways, higher high, higher high. When is it made a higher low? I mean, a lower low, right? So if you're following Apple, watching that pattern, I would look for Apple to make a lower low wave. Once Apple makes a lower low wave, that's something that it hasn't done in quite some time, all the way back till since June. So that's something interesting to watch on Apple, um, to see if it makes a lower low. And yeah, so I'll just keep an eye on that. You can watch the levels on Apple. You put it up on your daily chart, whatever chart you use, and see how you see it. But Apple's been strong, lots of cash flow, but they ran into a little bit of turbulence, and I believe that they had some issues with privacy and hacking and things of that nature that they do have to deal with. So we'll see how that may impact them headed into this upcoming week. We'll see if people are lightening the load on Apple. And what's funny is Apple would be a company that on these drops that you would think a lot of companies would buy because so many people have it in their retirement account. So many hedge funds are in a company like Apple, and that you would sort of on this run back up scale out. But you'd have to dig into the volume to see what that looks like. How many people were in, how many people were holding, and how many people were selling on this run back up. I'm not going to do that. Just don't have an interest in it right now. But that's what I'll be watching for Apple. If the buyers do step in and we push back up, then the 174 area would be the area that I'll be watching to clear and seeing if we can get above the 176s and if we can see strength, right? That's what we'd be looking for. Looking to the left, you can see, yeah, when Apple has these runs, it does pull back. It has these runs, it does pull back. So we'll see. On Apple. Okay, keep it moving. Tesla. Remember, Tesla has a split. It says the 25th. I think it's 3-1. Not 100% sure. Yeah, not 100% sure there. Tesla's in the 880s. I'm just not going to touch it. We'll see how next week plays out. But if you're looking at Tesla, right, and I played this, the 930s was an area that you could look to get into to short, and expectation being a pullback to the 850s. So if you look back at this was this from April. Look how we bought into those 930s. This pullback here. So we were dropping, pull back into this 930-ish area, 940-ish area. What did we do? We sold from there. So I was like, okay, let's see what happens next time we get near those 940s, this 937-ish area. So we pull back into that. We kind of flared, but didn't really touch it here. 1st of August, but then on the 4th of August, look, we're right back there, rejected, sold down to the 850s, bought back up to it, and it looks like we were headed back down, but the week kind of got funky. So we'll see if we get back to the 850s, but I'll definitely be watching this area. Oh, excuse me. To see if we dip below the 850s. I will not be touching this as we head into a split. I'll just see where it resolves. And if this is like what happened with Google and Amazon post split, they did sell a little bit, right? So we'll see if that plays out again in Tesla. That's something that you may want to watch on the 24th, or is it the 25th? Maybe it's the 25th where the split goes down. But double check when Tesla is splitting, and then keep an eye on it to see if you see a little bit of sell side activity right after the split. But those levels I'll be watching, and I'll sort of reset this based on pricing where it ends up. But that's interesting on Tesla. But the 780s was a really strong area on Tesla that we saw some good buying from. Keep it moving. See if I may be forgetting something. But what I did want to get into, let me take a peek over at CI. Just a quick one, just a peekity peek, because we did mention this and we did play this. But with the turbulence in the market, definitely take a peek at defensive sectors, consumer staples, or energy. Just take a peek at those and see where the cash is going. Cash is always going someplace. I'll come back to that, but we saw a push here. Look for a break of the 294-ish area to see if we see a squeeze into 297s or higher. I am not in CI right now. I got out on the pop. But for those that may be trading this or still in, just be careful. I like to, wait for a pullback and then get back in, but this thing has been pretty good. Just watch healthcare. Check healthcare out. As we see this turbulence in the market, just compare healthcare and see how healthcare is moving and pick your levels. If I was looking at CI, I would definitely watch the 286 area. Then what's this? Yeah, it's just so. Yep, 286 is an interesting area. We'll see what happens around there. But let me keep it moving. If you remember, we mentioned Target a few videos ago. That remember what happened on the 27th to the 31st of May. It rejected at the 166-ish area. We got back there again on the 1st of August. We see more acceptance, not a rejection. It's holding those 163s, almost as if it's trying to base to go. It went, worked out great. Now we're selling again. Now that we're back to this 166 area, if we see acceptance back down through the 163s, then I'll probably be fading this to the downside. So we'll see. I'll be watching this next week. Acceptance of the 163 area and continued selling, I will be in riding this down to the 155 area, maybe to the 150s, maybe even lower. But we'll see how that plays out on Target. Probably do like a vertical or something like that. Wide, maybe, a wide vertical, and let this thing go down. Yep, but we'll see if the buyers step in and push this back up. And I have to actually check their earnings. I didn't read their earnings, so I need to read their earnings report to see what they're predicting. But if companies are predicting recession in 2023, and if inflation is still kind of high, I don't see how a company can really guide up into inflation headwinds and interest rate hikes, and a potential recession. But we'll see. That's Target. So let's go over to, I forgot all about DLTR and their earnings, 25th. I definitely want to see what happens there. But you see how this didn't really move. So all that selling on Friday, almost no movement in DLTR. Isn't that interesting? So you can look around at different companies, right? This is Dollar Tree. And remember what we mentioned about Dollar Tree that we believe is interesting. Usually when people are struggling financially, Dollar Tree is one of those companies that people tend to go to because it's inexpensive to buy small things there. So definitely keep an eye on Dollar Tree as you see more financial economical turbulence or economic turbulence. Keep an eye on Dollar Tree. Take a peek over at Walmart. Oh, look at that. Take a little bit of a hit there, right? Look around. Home Depot, a little bit of a hit there, right? And I just think it's interesting, but I'll leave that alone. Let's go over to BBBY, and what I wanted to look at was I wanted everyone to see because it's interesting. So let's flip this to a daily chart. I want you to look at this, and this is what you look at whenever these crazy things happen. Because I shorted the heck out of this bad fella, because it's what's that old JC? We don't believe you. You need more people. So this is just going to be super quick. Not going to spend any time here, because I don't really trade things like this unless it's just like throw out a few, grab a couple of contracts, and wait for it to sell. So looking at this, right? What do you see? No matter when you see these big spike candles on BBBY, within a few days, it sells back off, right? Almost like a guarantee. Big spike candle, sell back off. At least a 50% retrace, usually more than that. And going again, not really, sell back off. And gonna go and sell back off. Ooh, we gapped up. Yay, we've cured COVID, sell back off. Here we go. Let's go to the moon, sell back off. To the moon, sell back off. Here we go. And sell back off, right? So whenever you're looking at whatever the ticker is, And if you're not used to trading penny stocks or super volatile stocks, it's best to avoid this. But there are ways to play these things. When you see this type of a chart pattern, and a lot of my friends, when we were up in the 20s, they were shorting like crazy, not with shares, but with the options. Because hey, if something crazy happens and this pulls a GME and goes to like 100, doesn't matter, right? You're not worried about that. You're not getting margin called. So because getting short shares and something like this that can go nuts might be slightly risky. So you can buy, 50 contracts, 100 contracts. It depends on your risk, 10 contracts, whatever your risk may be. When it's up here in the 20s, and expect to retrace, right? Because what have you seen? 50% or more retrace on every one of these major spikes within a few days, right? So that's what you look at with companies like BBBY or GME. But if I'm looking at BBBY, now that we're here, we have to see what happens. But it's not, I'm not gonna get into the technicals here, but just mentioning that specifically about the spikes, always look for a pattern, and that's what you want to trade is the pattern. What are we going to do from here? I have no idea, right? Whenever a stock is heavily manipulated, you don't know. It means for those that dig into this, I stick to the blue chips, but I'm just mentioning you just look at the patterns. That's all I'm mentioning. I'm not, not getting into any of the details of it, but all these tickers, right? And even this one, look at the green. This is insane. If you're in here and you're short shares, you probably get margin called, right? But guess what? If you're not short shares and you're short options on this bad fella and you're out, 3 weeks, hey, come to daddy. Right? It's and depending on where you get in, you wait for the first red day, right? So people usually wait for the first red day, and after that's where you look to get short, right? But just looking at this, anywhere that you see a massive spike, you just have to buy yourself time, right? Maybe a month or two. You want to buy yourself time because let's see where we are a month later. Roughly back, but a little bit above. So you need more time, but you kind of want to let this thing run because you see that you've seen multiple day runs on this ticker, and it's done some insane stuff. So you want to buy yourself some time here, but it seems as if it can go on multi-day runs. And when you see enough of an extension, then that's a potential, right? I don't recommend playing it at all if you're not used to it, or if you're not sort of in the know as to what's going on. And if you play it with options. That's just my opinion. Over to the SPY. And very similar to what we mentioned. You see a lot of, just like you can tell, I used to be scalping and swinging the heck out of this thing. Okay, we'll see if we get back to the 418s, what happens there. Or even into the 417 area, but we see candle structure here. Yeah, probably the 429 does expect to just struggle. Even if we see an extension, because the next rise is from this area all the way. Look at that candle structure to the the 440s. So about like a 10-point window in there. So we see how this week works out. Next up is the 420.30s and the 418.22s to the upside. If we were to buy and get above the 422s, is 424.50s and 425.90s are two areas to watch. Yeah, interesting. Oh yeah, I forgot about KMX. Just gonna peek at KMX. We're not saying to trade. I just want to talk about it because I thought it was interesting. So looking at KMX, they have earnings coming up on the 29th of September. So we got a little bit of time. But we see the 96s is an area where some slight buying may step in. Looking back over here, 24th of February, 28th of March, 1st of April, 7th of April. Just sort of a push out of those 96s. And each one of those pushes, you get minimum of 4 points. So we'll see if that plays out. Not recommending anyone play this. It's super spready, but I might. I actually was planning to get into this Friday to see if we had a reaction here, give it a 3-point stop or so, but I got busy and I missed it. And I'll take some of these sometimes, I'll take like a couple of contracts, 3 contracts or something, and just see if something plays out. Just because part of the excitement in the market for me is to have an idea and see if it works. Right. And I do stick to my bread and butter, my futures plays and SPX plays and iron condors and different things that I do trade that I do like, and QQQs and um, you know, well now my sisters get me into oil and things like that. But I have my bread and butter plays, right? But then I like things like this, like KMX, I think is interesting from the 90s. If we look at NOC, I think NOC is interesting. Why do I think NOC is interesting? I think NOC is interesting because, right, we look back here to March, and even if you say that this is like between 435-ish and right about here, 477-ish has been interesting, but it's actually much of a bigger extension to like the 490-ish area, where you see once we push through the mid 480s, we're seeing retracements, right? Boom, 2, 3, just nice retracement into this area, but we've sort of hung around the 430s by the 480s. So that's interesting. So we sort of pushed above that a little bit. So what will be interesting is if we see buying above this and then we get an extension into the 5s on NOC, that will be interesting. Not going to get into it. Going to keep pushing. CMG. CMG's been on one heck of a run since earnings. There should definitely be a little bit of a pullback in here. The question is always going to be when. So I'm actually probably going to hang a few vertical plays on CMG out a few weeks just to play with it, right? I think a pullback to the 1540s is definitely in the cards. I did play something to the 1660s, but we'll see what happens from here. So we'll see, right? I did a condor on this in case it went to 1800s, or if it went back down, it went back down. So that worked out great. But we'll see what next week looks like. I'll be taking a peek at it, but we can see, look here, right? Back on December of 2021. Look at these tests in the 1655-ish area, and it gives rise into the 1722s. And that's kind of what I was watching when I was putting my play on here, is that we see a little bit of turbulence here in the 1720s. That's a good place to get short. And a little bit of support in the 1650s, 1660-ish area, right? And so that was the play. Didn't quite get there, but it kind of worked out either way. Good retracement here. But the problem with CMG is very spready, and the repricing is kind of funky sometimes. And what did I forget? Forgot Meta. So Meta, we're pulling back into the 166-ish area. Remember, we're sort of in this 170 by 155, right? So we'll see if we're back in sort of that little thing where now that we're below the 170s, if we get a retrace back into the 155-ish area, we see a little bit of basing here in the 166-ish area, which we're right above. So we could see the sort of pullback on the 5th of August, then the 9th of August. So Meta is interesting. Keep an eye on that. Remember the metaverse. We'll see how they pull that out in previous videos. Not going to get into it today. If you like this video, please go to our channel, Power of Pivots, on YouTube and subscribe. And you can look forward to receiving more videos like this, and also other contents of setups and structural and technical plays and patterns to look for in the market. And you can also look to receive videos from Elisa as she discusses how she utilizes her Power of Pivots setup and script and software to be able to find great entries pre-market, intraday, and also post-market. Thank you so much for your time. Have a wonderful week of trading. For those already back in school, congratulations. For those getting those kiddos back to school in the coming weeks, congratulations. Get that school shopping done. We just went through it. But have a wonderful week of trading. I'll say it again, and remember, no matter what happens, you're always one trade away. Thank you so much.